ऐसा बोलता है मैं आपका स्वागत है। मैं आनंद श्रीनिवासन। आज दिसंबर के अंत में है। अगली 2 दिन में परसों नया नया साल है। इस साल अच्छा गुजरा। जो इन्वेस्ट कर रहे हैं, निवेश करते हैं, उनके लिए बहुत अच्छा गुजरा। स्टॉक मार्केट्स में स्तला रिटर्न मिला। जो बॉन्ड में इन्वेस्ट किए उनको भी रिटर्न मिला, और जो सोने पे इन्वेस्ट किए उनको भी बहुत बेहतरीन रिटर्न मिला। अगले साल कैसा होगा इसके बारे में हम हॉट टिक्स करेंगे मेरे भाई के साथ। और ये अंग्रेजी में होगा। जो भी मुझे अनुवाद करना है, ट्रांसलेट करना है, मैं ट्रांसलेट करूंगा हिंदी में। लेकिन ये तो हिंदी में ही होगा अगले 3 दिन के लिए। मेरा आशा है कि ये नए साल आपको बहुत अच्छी न्यूज मिले, स्टॉक मार्केट ऊपर जाए, आपके रिटर्न्स अच्छे रहे। चलें।
First question, which people have been asking. Let's assume the PE ratios are similar and it's all debt free and we only
हम्म,
have limited money. How should we prioritize our undervalued stocks at this time? If we have pharma, IT, motor, and gold loan companies and jewelry, FMCG sector, which should we prioritize on? Assuming all the PE ratios are similar and it's all debt free and we have only limited money.
be debt free and limited money. You should put in gold loan stocks right now, gold loan company, because they offer the best value. You may not get the return in 1 year, but over a 3-4 year period, you may get 5-6 times the money you have invested. So you should not be willing to look at it every year. But as of today, you have to pile on in. If you have limited amount of money, you should buy to gold loan stocks, and you should be waiting for at least 3 to 4 years.
Okay. And the next question people have been asking is what is the relationship between oil, gold, and the stock market? How are they related?
Most important thing is you have left out is the dollar. Gold and oil are inversely proportional to the dollar. Stock market is also inversely proportional to the dollar. What is directly proportional to dollar is interest rates. If interest rates go up, dollar goes up. Once interest rates and dollars goes up, gold comes down, stocks come down, oil also comes down. So you have to watch dollar and US interest rates on one side, and the others on the other side, the commodities on the other side, along with stock market. And in the coming year, the final rally from December 3rd, we have had a continuous upward swing. That is because Jerome Powell has said that he will cut interest rates. So if you cut interest rates, the value of the dollar will fall, the value of gold, oil, and stocks will go up, and that's exactly what has happened.
But how does this relate to rupee also then?
Depreciate slowly against the dollar, about the rate of 3% to 5% per year.
Okay. So if you are sitting outside India, how should you look at investing? Should you come to Indian markets at all?
This times the foreign market, especially Japanese stocks and some American stocks which are not there in the top 7, which are not linked to artificial intelligence, are very cheap. So I would rather, if you are abroad and you want to invest in equity, look at Japanese and American stocks.
And this year, we've been focusing heavily on the Indian bond market and finding the equity market overvalued. Is there any time period that we must exit the bond market and focus on other instruments? If so, explain.
Time comes, we will worry about it. When you find the market substantially cheap, we will sell the bonds and buy into equity. Bonds are giving you 9.5 to 10% returns. So the market has to correct at least 25% from here before you can think of selling the bond.
Why no one is speaking about Nasdaq 100 index fund? Considering their list of the US companies is good to invest or SIP in the Nasdaq 100. Is it the same as investing in the US stock markets?
Tech 100 funds in India, which is what these guys are talking about, is a fund of funds. They are not investing in the American stocks directly. They are taking money from you, charging a fee to invest in another fund. So you pay 2 times the money. That's why nobody talks about the Nasdaq fund of funds in India. And the S&P 500 contains all the big Nasdaq stocks. Therefore, the S&P 500 is a better investment vehicle than the Nasdaq 100.
So if I wanted to invest in the US, what is the most efficient way to transfer with less charges from India? If I'm an Indian, resident Indian.
I am not your auditor. I am not your auditor.
Hmm.
But you don't buy more than 7 lakhs in one account because you will pay 20% tax. So there's husband and wife. First 6 months buy in your name, next 6 months in your wife's name. So you can keep the taxation low. You
Hmm.
have to negotiate with your bank for the transfer fees.
Hmm. Because as of now, because it was only rolled out in October, it still hasn't come into full implementation in this transfer. So when can we
If
expect
you
this
if
implementation?
implementation is already there, if your net transfer crosses 7 lakhs, your tax will be 20%.
No, but it's deducted at source, right? When you transfer itself,
So it's not tax deducted at source.
it's not TCS.
Tax collected at source. It
Sorry,
is
tax
not tax
collector.
deductor. Yeah.
Sorry,
So
tax collector.
yeah, so you can adjust it with the paid tax, but it is very painful if it's 20%. So if you
True.
for say buying $1,000 for the
Mm,
first 7 months you buy in your name, next 5 months in her name. So you
mm,
have gone into the next year. Then
mm,
another 7 months in your name, 5 months. If you split
mm,
it into two accounts, you can pay 5% tax and get away with it. And that
mm.
tax can be adjusted against your income tax payable.
Okay. Now, other questions they're asking is, we do not touch overvalued stocks, but some overvalued stocks do perform great. Does this mean we should always avoid high value PE, or should we look at it differently?
To avoid stocks because you are confusing by looking at some arbitrary nifty. My idea is to buy Tata Motors at 70 rupees and wait for it to go to 800 rupees. Or to buy a Karnataka Bank at 35 rupees and wait for it to go to 250 rupees. I don't have an artificial 1 year window in which I have to look at things. I have plenty of time. So even if a market, if the stock I buy goes up 10 times in 3 to 4 years, I am very happy.
Considering the current IT market, especially people like me who are having more than 15 years experience, it's difficult situation as we have family commitments, dependents and expenses. But employment market is not in our favor. So is it my understanding going to be similar for the next 1 to 2 years? Do you have any suggestions how to prepare ourselves for unexpected happenings in the example job loss? Do we need to change our investment strategy for stable or liquid assets?
Is going to be like that. If you have 400 grams of gold, you need not worry because in a jobless scenario, you can borrow against gold. Upskill yourself, do more certifications, and keep upskilling because you become an important cog in the wheel and the company would not like to get rid of you. आपने इस पॉडकास्ट को सुना इसके लिए मैं आपका आभारी हूँ। इस वीडियो को लाइक कीजिए, हमारे चैनल को सब्सक्राइब कीजिए और बेल नोटिफिकेशन दबाएं। अगर आप बेल नोटिफिकेशन नहीं दबाएं तो आपको नोटिफिकेशन नहीं आएगा जब हर बार हम वीडियो डालते हैं। इसीलिए बेल नोटिफिकेशन दबाइए, चैनल को सब्सक्राइब कीजिए और इस वीडियो को अपने दोस्त और रिश्तेदार के पास भेजिए, उनको देखने की आग्रह करें। नमस्कार, धन्यवाद, जय हिंद। जनवरी के महीने में मैं त्रिवेंद्रम आ रहा हूँ। त्रिवेंद्रम में आपसे मिलूंगा। जो भी मुझे त्रिवेंद्रम में मिलना चाहता है नीचे दिए हुए जीमेल में trivandrummp@gmail.com में मेल भेजें और या नीचे दिए गए व्हाट्सएप नंबर में हमें संपर्क करें। धन्यवाद।